My name is Mikhail, or Mr. B, and on today's video I'll be teaching you different cryptocurrency investing strategies. Let's begin.
Money on my mind is what I believe. I'm staying up all night, I'm chasing my dreams. Couldn't get distracted, don't change the scene. Can't eat the food, change the recipe.
But first, consider leaving a like, subscribing, and hitting that bell notification to be notified of my next uploads and to be part of the community. Now let's head into the video.
Now, the three trading strategies are dollar cost averaging, the rinse and repeat method, and actively trading. Now, the investing definition of dollar cost averaging is when an investor divides up the total amount to be invested across periodic purchases of a target asset in an effort to reduce the impact of volatility on the overall purchase. But since cryptocurrency is so volatile, we have to change it up a bit. Here's an example of how it's used, but let me show you how to use it in cryptocurrency. Before I show you my chart, let me show you why this one is inefficient. As you can see, regardless of how much the share was worth, this person continuously bought in from $10 to $10.50, down to $10.75 to $11. He continuously bought in. Now take a look at my chart. If you notice, I try to buy when the prices dip below my initial entry price. To understand why this is important, take a look down here. From my entry price of $1 to 2x my money, the price will need to go to $2. But if I buy it when it dips to 90 cents, the price it has to go for it to 2x is decreased to $1.80. And if you notice, that's not even a whole dollar increase. If my entry was $1, it would take me a whole dollar, 1 to 2, to 2x my money. But if I got in at 90 cents, it wouldn't take a whole dollar movement. To get to $1.80, that's 10 cents less than a dollar. To get to $1.80, that's 10 cents less than a whole dollar movement. And if I got in at 80 cents, that's 40 cents less than a whole dollar movement. Something I also realized while creating the chart is, for you to 2x your money, your entry price needs to move itself. And what I mean is, let's say I got in at $1, it would need to move itself 1 to 2 for me to 2x my money. And if I got in at 80 cents, it would need to move itself another 0.80 cents to $1.60 for me to 2x my money. Now look at this. This is where it gets interesting. If I got in at $5, it would need to move itself another $5 to $10 for me to 2x my money. This is why I love getting into coins that are $1 or a little less, or coins that are at a cent or a little less, because if I got in at $1, 1 to 2 is a 2x, 1 to 3 is a 3x. Or if I got in at 1 cent, 1 cent to 2 cents is still 2x, the same principle but at a smaller scale. Now check out this chart below. If you got in at $1 and you placed $100 in, for you to 10x your money, the coin will have to go up to a price of $10, leaving you with a total value of $1,000, $900 profit. If you got into the coin when it was 10 cents and placed $100 in, for you to 10x your money, the price of the coin would have to go to $1. Now, if you got in when the price was just a penny, 1 cent, if it went up to 10 cents, you just 10x your money. Now take a look at the 100x chart. If you got into a coin when it was $1 and bought $100 worth, if that coin goes up to $100, you just 100 extra money. Your $100 is now worth $10,000. If you got into the coin when it was just 10 cents and bought with $100 worth, if the price of that coin goes to $10, you just 100 extra money. Now if you got into the coin when it was just a penny, 1 cent, if that price goes to $1, you just 100 extra initial investment. The goal is to get in at the lowest price possible. Now, to put this into perspective, can you imagine the amount of money the people who bought Bitcoin when it was a couple of cents are right now, when it's way over worth $50,000? I hope that made your brain explode. But if you're still here, let's move on to the next strategy. The rinse and repeat method, or what I like to call it, the unlimited money method. And here's why. So to begin, let's say you bought example coin. You bought it April 24th and you bought it on Coinbase. You entered in when the price of example coin was $1 and you spent $100. You'll have a quantity of 100, and if that price goes up to $2, your initial $100 investment is now worth $200. From here, you can choose to sell half your stash to get back your initial investment, which was the $100, and leave $100 in for the coin to go up or down. At that point, if the price goes down, it shouldn't matter to you because you already have your money back. And that $100 left in that coin is basically free money working for you that you can make even more money. And if you decide to sell half your stash, you sell half at $2, that'll leave you at a quantity of 50 because initially you had a quantity of 100. Cut this in half, 50. You have back your initial investment. That was your first flip, and you gained $100. Zero profit though. The reason why no profit is because you only got back $100. Your initial investment was $100, so you didn't make a profit, and you 2x that coin. So take a look at the third line. You now have a remaining quantity of 50. The coin price is at $2. Your value is now back to $100. Now take a look at the fourth line. With your quantity of 50, if the price of that coin goes up to $3, your value shoots up to now $200. From here, you can decide again to sell half your stash. You can sell half your stash at $3, sell a quantity of 25, half of 50. You already have back your initial investments. That's your second flip. You gained $100 and you profited $100. This time it's a profit because you already broke even with your initial flip. Now turning the second flip, you broke even and you received profit this time around. And you just 3x that coin. Now take a look at the fifth line. Now you're sitting back at 25, quantity of 25, coin price at $3 with the value at $100. Now let's take a look at line 7. Line 7 is different because instead of selling half your investment when you 2x, so from $1 to $2, you could decide to sell half your initial. You could decide to sell half your stash when the price 4x from $1 to $4. So take a look down here, line 7. The price is $1. You got in when it was $1. You put $100 in. That leaves you with a quantity of 400. A quantity of 100. Now, if the coin price goes up to $4, you just 4x your initial investment, which is at $100. So now you're sitting at $400. From here, you can decide to sell half your stash. So you sell half your stash at $4. Quantity of 50 that's sold, half of 100. You got back your initial investment. That's your first flip, and you gained $200, but only profited $100 because that first $100 was to break even, was to get back your initial investments, and that next $100, that's profit, and you 4x that coin. Now take a look at line 8. So now you're sitting at a quantity of 50, with the coin price still at $4. Your value will be $200, or $200 remaining in that coin, because when it went up to $400, you sold half. Sold half the quantity, sold half the amount that you had, so you got back the $200, and you're remaining with a quantity of 50 in that example coin. And from that one transaction, you gained $200 and profited $100. Now take a look at line 9. So with line 9, the coin price goes up to $6, and you decide again to sell half your stash. So you sell half your stash at $6. You sell a quantity of 25, half of 50. You already have your initial investment. That's your second flip. You gained $200 and you profited $200, and you 6x that coin. Now take a look at line 10. So now you're sitting at a quantity of 25 remaining. When the coin price is at $6, your total value is now back to $200 because you just sold half again. And over here, you made a total profit of $300 because from your first flip, you profited $100. Your second flip, you profited $200. So now from your second flip, your total profit, $300. And on your second flip, you gained $200 and you profited $200. And you 6x your money. Now let's take a look at line 11. The price of that coin goes up again to $8. So you tell yourself, you decide to sell half again. So you sell half, 25, half of the example coin, and you only have 25 remaining at $8 when the value is at 100. So your selling price is at $8. The quantity sold is 12.5, half of 25. You already have your initial investment. That's your third flip again. You gained $200 and you profited $200. And that's at 8x of your coin because you initially got in when the coin was just $1 and now the coin's all the way up to here to $8. 1 to 8, or 1 times 8, 8x. And now if you look up down here at line 12, you're now sitting back with a quantity of 12.5 remaining. The coin price is, when the coin price is at $8, your total value is at $200. And in total, from this one transaction, you profited $500. From your initial investment of $100, you profited $500. If you wanted to, you could sell the rest you have in here and get $200 and add it to the $500, which equals $700. So realistically, your $100 got you to $800, which is a $700 profit. But you keep the remaining in here just in case the price goes to $10, and you can sell half again and keep flipping and so on and so forth. This is what you call the rinse and repeat method. The goal for this method is to be able to purchase more cryptocurrencies and other things with the money generated from your cryptocurrencies, and to not use your other income. And the other income could be like your salary or your job income, you know what I'm saying? And the goal is to let your money work for you. The last strategy, actively trading, which means to make consecutive trades within a working day. But with active trading, you're not looking to 3-4x your money. The goal is to make a bunch of small profits, which will add up over time. The goal is to be able to buy in and sell between a 3 to 5% gain, 10 to 20% gain, 25 to 50% gain, or 75 to 100% gain. For example, take a look at line 2. You got in when it was $1, you spent $100, and you exit when it's $1.25. From $1 to $1.25, that's a 25% gain. 25% of $100 is $25. So when you exited at $1.25, you came out with a 25% gain, you exited with $25. So now your total value after that one transaction, this one successful trade, that's $125. Let's look at line 3. You do another trade. You spent $100, you got it at $1, and you exited at $1.25. Same percent increase, percent gain, 25%, exited with $25, $150. You did the same thing over again. And then from your fourth trade, your fourth successful 25% gain trade, you just 2x from your initial $100. And these are what active or day traders do. They make consecutive trades throughout the day to make profits, which will add up over time. Now take a look down here. Instead of the 25% gain, we're now at 50%. So if you were to get in $1, exit at $150, that's a 50% gain. 50% of $100, that's $50. So you left that trade with $150. Your second trade, you'll be at $200. Your third trade, you'll be at $250. Your fourth trade, you'll be at $300. From your first 4 consecutive trades, the $200, that's a $100 profit. From your second chart of trades, the $300 is a $200 profit from your initial $100. It's not all the time that you'll see big percentage gains between 25 to 50%. Mainly the goal is to get between 10 to 20%. But if you can get 25 to 50% or 75% or higher, then the trade is successful. No more money, I put it all in cryptocurrency. No more money, it's coming back to me differently. No more struggling, I'm finally seeing my own destiny. No more hurting, I was testing my own integrity. Money on my mind is what I believe. I'm staying up on that.